Honestly, do you want to become a profitable, wealthy trader or not? Maybe this video is gonna be a milestone for you. Today, I'm going to open up a smart money trading for you, a smart money concepts for you, and we are gonna find out why a smart money trading is obviously the best method you can find out there. So you can see the map of your journey as a smart money trader before you start it. Hello my friends, I'm Mehran and I'm with you with Trading Companion channel. We are going to dive into smart money concepts and why smart money concepts are important for us as a trader. I'm going to talk about the right mindset as a trader for you at first, and then we are going to talk about basic old smart money concepts. It's episode 1 of part 1, which is advanced market structure, and we are going to talk about some mindset paradigms and concepts. Then we are going to talk about why we use smart money. Then we are going to dive into basic concepts of all the smart money in action in a nutshell, and at the end of video we are going to talk about fractals and how to use those concepts as a package. So get sure to subscribe and watch the video until the end. In the next video, I'm going to upload a PDF for you in description so you can learn a lot about smart money concepts and fractals. Let's talk about the right mindset to start a journey named trading. First of all, don't waste your time if you believe you can achieve 80% win rate. It's impossible to have a 80% win rate strategy. Let's say that you can find a strategy that has 80% win rate and 3-to-1 reward to risk ratio. And let's say that you can find 10 trades a month with that strategy. So you will have 20 rewards for those 8 profitable trades. I mean 8 multiplied 3. It is going to be 24 rewards. And if you risk 1% for every trade, you are going to have 24% in profit. You have 2 stop losses, so overall you are going to have 22 rewards or 22% profit in 1 month. Let's see how much you'll have with a starting balance of $10,000 after 10 years of trading with this strategy. It is the compound interest formula for $10,000 starting balance, and with 22% profit every month, you see that we have 120 months, and it is going to be $23 billion after 10 years of trading. I just ask you one question and we close this topic. Do you think for starting a business, for starting a job, for starting a startup, for starting a trading journey, is it realistic to have $23 billion after 10 years for a starting balance of $10,000 investment? Or it's just bullshit? Let's talk about the next concept. I'm a teacher and I'm the best teacher you can find for trading. You will learn a lot of things here, but this journey needs your time, your practice, and your dedication as a new student. So you are going to save time for practicing, you are going to be disciplined, and start practicing the concepts that you are going to learn here. It needs your part of efforts, like me as well. I'm going to talk about a lot of things here, like smart money concepts, technical analysis, volume trading, and fundamentals. So you are going to be okay with just this channel. We are in Iran, we are in an internet blackout here. We don't have access to the internet all the time, so I can't trade all of the time. Your subscriptions, your likes, your comments, and your support is going to help me a lot, because I think I am going to be a refugee this year or next year, so you can support me a lot and you can learn a lot by doing that. It's all free, so thank you for your support. Let's talk about the next concept, and it's an important one. You shouldn't focus on using concept. Let me explain that. the trades will come to you over time. Don't push yourself to use the concepts. Learn them, practice a lot, and when you saw a trade forming on chart, try to use them. Don't search for a setup. They will come to you. It's like searching for hunts in a hunting ground. You can't just start running and make noises to find a hunt. You should be patient, you should be calm, and wait for the hunt to come to you. The next important thing you should consider is that for the love of God, don't waste your time searching for the Holy Grail by changing your methodology. Just stick to one method and you are going to be okay. Let's get to the main point. Why I say that smart money concepts are the most powerful methods that you can find and trade with. First of all, it's reasonable and mechanical. It uses the healthy reason of mind toward the markets. It doesn't use illusionary setups like shapes that are being used in kindergartens to amuse 3-year-old children like triangles or rectangles. And it's mechanical and you can follow your strategies step by step. The second reason to use smart money concepts is that because of reasonable concepts like order flow, it keeps you on the right side of the market and you are going to trade pro trend. We hear that all the gurus are saying that trend is your friend, trade with trends, trade pro trend, but they don't teach you exactly what to do and how you can categorize trends of the market, how you can find out where the market is heading and where the market is target. But in this channel, with concepts like order flow and liquidity, you are going to learn exactly how you are going to find out where the market is heading. After that, it's practical and simple without complex bullshits. It's basic of market. Markets are using these concepts to move and you are going to believe that when you start trading with a smart money concept and when you get what is a smart money and how to use them. The next concept is that it has the highest reward to risk ratios compared to all the methods that you are going to find. You even can't believe it. Those 40-60 reward to risk ratios will come to you. They are rare, but they will come around sometimes. But at all, smart money concepts have the highest reward to risk ratio compared to other methods, and you are going to see them. All the SMC concepts boil down to these four important concepts. And the problem is that all the SMC teachers don't get this concept. They are just parrots who repeat what they had learned from their owner. And that's the reason why you see an 18 years old teacher who is teaching setups and I don't know, change of characters and flips and all kinds of bullshits because they didn't get these basic concepts as pillars of those concepts. Please don't get me wrong. Even those simplistic views of smart money concepts are powerful concepts. But you should get the main pillars like liquidity, like imbalances, like structure points, like swing points. They don't even know what is a swing point. And they are teaching smart money concepts. So let's get to basic all the smart money concepts in a nutshell. I'm just going to talk about them briefly, but in this channel we are going to open them up and learn about them in details. So first one is liquidity. Liquidity acts as fuel and magnet at the same time. I mean, it shows us where the market is likely to go, plus we use that as a buffer for higher probability trades and POIs, or points of interest. If you don't know these concepts right now or don't understand what I'm saying, don't worry, we are going to talk about these concepts for ages in details. So subscribe and click on those things that I think its name is call of action. Just support us. We are going to be happy to see you around. So the first one is liquidity. And we can find out where the market is likely to go or where the market is likely to reverse by using liquidity. The next important one is structure. First of all, markets don't have kings, so structure, imbalance, liquidity, and etc. They are all parts of a package. If somebody is saying structure is king, liquidity is king, or those bullshits, they are just gurus and want to niche down to sell courses. They don't have broad side of a trader. A structure is showing us market order flow and money flow, and we can anticipate in higher probability moves and piggyback market makers with this concept. The next important smart money concept is going to be imbalance. Imbalances are pure gold. They are pure sell orders or pure buy orders. Let's see them in a footprint chart. You don't need to know what is an imbalance right now. We are going to talk about imbalances a lot in this course. But for a starter, an imbalance is the space between first candle, the shadow of first candle, and the shadow of the third candle. I mean, it's pure body here. And if you pay attention to this imbalance, you can compare the buy orders on the right side with sell orders on the left side. You can see 12 buy orders compared to 8 sell orders, 16 buy orders compared to 1 sell order, 20 buy orders compared to 0 sell orders. So the imbalances are pure golds in the market, and they are just buying pressure or selling pressure. And the fourth important part of smart money is time and price. You won't find a single successful trader or teacher that isn't using some kind of time and price story. I mean, for example, fractals is one kind of time and price story. In SMC, we use some sweet deep concepts of time and price relationships like kill zones, which shows us high probability trading hours. I'm not talking about those illusions like astrology trading. I'm talking about the reasonable time and price relationships like good trading hours, good trading days, good trading months, or fractals. Let's talk about fractal. What even fractal mean? It means that what is happening in higher time frames is made of lower time frame similar structure. What do I mean by that? You can see a simple chart here. It's from Euro to USD. You can see that we have a break-off structure here, or BOS. You can see that we have our order block here, our imbalance here, our liquidity to take here and liquidity to target here. And what does fractal mean? You can see that it's the same thing from here. Yes, this setup is a little messy, but I wanted this setup to be the actual lower time frame of this zone. And you can see that we have the same actual concepts here as well. You can see that here we have our liquidity to take here, we have our liquidity to target here, and here we have our imbalances here and here. And you can even see the liquidity in entry here or here under this shadow. So the same thing that is happening here is going to happen in lower time frames that we are going to use to enter the market. Thank you for watching this video. We are going to open up these concepts in details for you for free. You can subscribe to the channel and hit that bell button so you can support us, and we appreciate that. And you can see other videos that we are going to provide to you for free. I'm going to upload a good PDF about these concepts in the description of next video, so you can access to that PDF too. Thank you for watching again, and goodbye.